From that graph, you can see that there will be 1 billion people by the end of 2025 and 4 billion by the end of 2030. That's half the world then. What does that really mean? You can also look at Bitcoin's log chart and guess what will happen in the future. This will show you the rate of growth over time, which is called an exponential trend. It goes up to about $1 million. The space goes from $2.5 trillion, which is how much it is now, to say $10 trillion, maybe $12 trillion, maybe $15 trillion, based on how the cycle is going, and then to $100 trillion, which is how much most other asset classes are worth. Raoul Pal, the founder and CEO of Real Vision, has made one of the most optimistic long-term predictions for Bitcoin and the cryptocurrency market as a whole. Pal thinks that Bitcoin will reach at least $1 million per coin within the next 6 years. This will make the total value of all cryptocurrencies in circulation a huge $100 trillion. Even though it's still pretty new, the cryptocurrency industry has quickly become a strong and unique force. Bond and stock investors may see small gains of 10 to 20% a year, but cryptocurrency buyers often see returns that big in just a few minutes. In November, Jurian Timmer, director of global macro at Fidelity Investments, drew attention to this difference by talking about how volatile Bitcoin is compared to bonds, stocks, and fiat currencies. According to Timmer's research, no other asset has the same regularity and size of gains as cryptocurrencies. Pal is still sure that the cryptocurrency market will continue to grow quickly in the years to come. He recently wrote on social media that the rate of acceptance of crypto is 2 times faster than that of the internet. He thinks that this fast growth will eventually bring the market capitalization of cryptocurrencies from $2.5 trillion to an amazing $100 trillion. In a recent talk, Pal went into more detail about these positive predictions. He emphasized how cryptocurrencies have the power to change everything and how they can change the way global finance works. Can you see it already? They're all scared of the next downturn because they remember the last one so well. But if you look at the pioneers of this field, like Dan Morehead and Wences Cassera, they didn't give a. They just wrote it and added to it during the down cycle, and now they have huge amounts of money. A lot of private people have also done the same thing. What most people fear, though, is the bad things that could happen. I was excited about it in 2020 because it meant I could add to my stocks at great levels and compound. It never feels good, though. Next, you reach your all-time high much faster than everyone else who hasn't done anything. That's really cool. That's why time span is very important. It's okay if you don't want to deal with the bad thing because it's against your nature to do so. You need to think about it. In both boom and bear markets, people lose their minds. They get rid of all their tokens when the market is down. People tell me I should never do that again because it's the worst thing I've ever done. They buy too much stupid crap when the market is going up. And really, to not up the move from 2.5 trillion to 10 trillion to 100 trillion is the same as having the best asset and doing nothing. We all have a place inside us that we call inner, so give yourself some room to do that. You name it, I have jobs in dog, whiff, hat, hit, and more. But I think it's about 1% when I look at my assets again. But I see it all day. I keep an eye on the whiff price all day. It's not funny, it's only 1% because the rest is a long-term buy and hold fund. A lot of people then try to be too cute by saying things like, I'm going to own this undervalued cryptocurrency like Cardano or XRP or whatever. Okay, there is a chance, though, that they won't go up in value as much as the proven product. Now, the tried and true goods are still popular. There has been 150% growth in Bitcoin over the last year, which is called the annualized rate of growth. ETH since 2012, ETH is about 160% to 70%, or something like that, since 2015 and 2016. That's every year. I mean, this is the return of bananas. After that, Solana is about 200. That was the picture from February before. A lot of these aren't even close to their all-time highs yet. That's why it's so profitable to just own the best properties. I also know that a lot of people may only have cash. They think, well, that's a 14x, even if Bitcoin goes to $1 million. I now have 140 grand. Is that even enough to put down on a house? Is that money saved for retirement? I get it. Thus, people really want to take more risks, but they need to be smart about it. That's the right way to do this. A lot of people lost all of their money in the NFT cycle because they turned their $10,000 into nothing like they did every coin cycle, as well as all the kind of very early stage speculation. The pockets of shame belong to all of us. It's not like any of us are better. The pockets of shame are something we all have. Also, don't use advantage like the other person did. People also love getting a return. I don't get it. That means returns come with risks. There is a risk with them. When you stake yields, it usually means that you've locked it up if you're not liquid staking. If it's liquid staking, there's a chance that Lido or someone else's platform will fail or something else unexpected will happen. And something strange always happens in crypto. Putting too much money into an asset class with 70% fluctuation is a very, very bad idea. Most likely you'll leave your coins behind. One of your jobs is to keep your coins from getting lost. That's the reason storage is so important. One thing you need to do is keep your coins close. Keep it for that bet in 5 or 10 years. And people in the future will always thank you for it. In 2013, I bought Bitcoin for $200. It reached 1,000. After that, it fell 87%. I had a long-term view though. I'm like, okay, it's a choice. What the heck? It wasn't a huge job, but it was good enough. I didn't look at it for a while. I paid attention, but I didn't stress about the PL because the bet keeps going over time. It's a choice. In the end, I sold out by accident in 2017 when things were getting crazy. I was up 10,000, 20,000, and 25,000. I remember the Bitcoin wars. I wasn't sure what was going on. It was also important to me to be too smart. So I made money. I thought, yeah, it's clear that I'm George Soros. I just made a 10x and it's great. Within 6 months, it went up by a further 10 times. In other words, nobody remembers 2017. They're still hurt from the last run. Well, 2017 was crazy because it was the end of that run. It went from $2,000 to $20,000 and then back down 85%. I didn't get back in until the sell-off after COVID. That was my light. After getting out, I got back in, traded well, bought everything that was down 50%, got a much bigger position than the first time, and have been in ever since. I should not have gone back. I went back and asked myself, what if I just stayed where I was and did nothing but 5 times better? Then I asked myself, what would happen if I did what I was supposed to do? What if I doubled the first bet, which wasn't too big that I couldn't do it? Just put that same amount in between 40% and 60% of the low. You're giving yourself a lot. I'm not saying you'll catch the low, but you have 40% of room to get around it. That's money being spread out over time during a bear market. Because that adds up, I'd have done 25 times better. That was a harsh lesson. Right now, my working theory is that you've seen me post charts of how crypto is being used in the past. That's why we use live wallets. We know they're being counted twice, but we're using IP addresses, which are also counted twice, to compare it to. Okay then, it gives you a general idea. You can use about 520 to 550 million wallets right now. It's getting bigger twice as fast as the internet. The world has never seen any asset class or technology catch on this quickly. AI has just beaten the technology side because Microsoft and other companies can put it everywhere right away. But it's huge because technology is an asset and AI is not an asset. From that chart, you can see that there will be 1 billion people by the end of 2025 and 4 billion by the end of 2030. Okay, that's the whole world. Okay, what does that mean? Also, you can look at Bitcoin's log chart and guess how much it will grow in the future. This will show you the exponential trend over time. It goes up to about $1 million. And what happens is that the space